All right, all right, all right. Good morning, everybody. It's Monday morning. Hope you guys are having a great day. It is time for the daily market commentary. I'm your host, Chuck Fulkerson. What's up, what's up, what's up? Glad you guys are able to join us today. For those of you that are new to the channel, do me a favor, click the subscribe button, hit the notification bell. I appreciate it. That would be amazing. Those of you that are here on the regular, hit a thumbs up. It means a lot. So apparently, by the way, Dennis says that he's not been getting the notifications when we go live. He happened to see the tweet, and that told him. So if you're not getting the notifications, make sure that your notifications are set up in your preferences. You might have to unsubscribe and resubscribe. I don't know. I'm not sure how to do it. So, yeah, Dennis, in the live trade room last night, we had an instructor talk about a 5-minute zone, but we're working on that. We're working on that. Listen, Tom, I don't need that nickname, okay? That nickname's not going to help anyone. That nickname's not going to help anyone. I'm just saying. All right, let's go ahead and get rolling with this morning's market. One thing I want to share everybody with real quick, for those of you, and we've been talking about this for a while, we're going to change a little bit of the format of the daily market commentary starting on March the 1st. We're not going to go live every day at 7 o'clock starting on March the 1st. I'm going to be doing a shorter DMC that's going to be pre-recorded. And then for those of you that are members of Traders Army, we are now going to have 3 live trading rooms a week right at the open. So we're adding 3 live trading rooms a week right at the open in order to kind of make up for that. So there's a little bit of a change coming in our schedule. But now, I mean, if you look at this schedule for the subscription at Traders Army, you now get 6 days a week of live trade rooms. And so, you know, it's for $149 a month. We feel like it's a really smoking good opportunity for those of you that are learning trading. If you're brand new to trading or you want to send somebody there, we'd appreciate it. Use promo code TRADER60 to get 60% off your first month. And that starts actually on March the 1st. So we're excited about it. Also, March the 4th is going to be our online Trader Summit. So in our Trader Summit on March the 4th, we're going to have a CBOE options trader, a CME floor trader. We're going to have a cryptocurrency conversation, and we're going to have a performance coach who's going to talk about the mental side of peak performance. I think that's going to be really cool stuff. So brand new people that you guys haven't heard from yet, and that I think is going to be really awesome. So if you haven't registered, please do so. TradersArmy.com/Trader Summit. So. Paul, I don't know that we're going to have that 5-minute update. I'm just saying. All right, so let's get into the ES this morning. On the ES, we had a level last night that we thought would make for a great breakdown, provided that we got the basing. Well, we didn't get the basing. However, this is a great picture of how oftentimes old support acts as new resistance. So for those of you that were in front of the markets, you actually got, I mean, this is a picture-perfect example of how to trade a resistance area, right? Because we got a resistance level at 38.78, where that level was our line of support, which now on the way back up, we got a shooting star candlestick with, you know, strong bearish candle that bounced off the level and now gave us an entry to come lower. So if you got in on that, that trade is actually running pretty well. And we could have your stop just above this area's high. Now, if you didn't get in on that and you say, well, I'm not a huge fan of that, I will say that the supply level that was created in the overnight is a decent level for a potential reversal. Our 4-hour trend has shown a bit of weakness, and now we've definitely clearly got lower swing highs in this overall position. So it does give you free reign to short at a limit entry when price comes back up into that region. So I'm feeling, you know, a bit more on the bearish side today after we broke down from that line, which is the line that we had put in place. Unfortunately, we didn't get the basing in order to get us an entry. That's okay. I wasn't awake anyway. I mean, my rule is pretty simple. If I'm not awake to take the trade, then I'm not going to take it. And I'm okay missing out on something like that. This wound up being a really nice reversal for my friends over in the UK. I don't know if you were looking at this one, John, or any of the other team that's over there in the UK if you're looking at this for a potential reversal. But it's a pretty clean area. Dennis says that supply shows up on the 2 and 4 hour charts. Good. I actually don't look for levels on the 4 hour chart. But I did. You're right. It does show up a little bit on there, and I never use a 2 hour, but it does show up. I want to use the 4 hour as my trend, and then utilize this for my entry. So that's 38.92 by 38.96 would be the area that we have in there. In the Nasdaq, we had a supply level here last night that came so close. Not really so close, but it came pretty close. And we were unable to get in and get filled on that position. And so a retest area that's similar to the one that we just looked at in the S&P would be this area right here, 13,524 by 13,547 on price retesting. Now, that being said, I really like a little bit of this price pattern that we're putting in right now, frankly. We're getting buying pressure, but the buying pressure is not enough to get us to new highs. So if you look at that on a 15-minute chart, that's actually pretty clean for a potential breakdown. So the NASDAQ giving us a fairly clean potential breakdown on the 15-minute time period with these lower highs, I think does set up. Now, what about that becoming a trap area of demand? Well, we do have a demand area below us, but that demand area has already been hit once, and then this wick hits it again, and we're just kind of basing in front of it. Well, that means that it's the kiss of death for that demand area anyway. And remember, we don't really utilize the 4 hour to look for zones, but our trend is definitely down. And so, yeah, there is a level out there, but I don't know that it's enough to stop price, especially with the bearish momentum that we have in play today. Oh, good point. Right around Friday's pit close on this area here. Yeah, right. It was. You're right. It was right around there. Okay. Next, the Russell. Now, I will say the Russell last night, I said if we're going to go long, the Russell's your better opportunity to get long. And we had this area right in here, this unbalanced wick over wick that I thought might be a pretty decent level for a reversal. The market was basing in front of that level about 2 to 1. So it did give us enough opportunity for an entry. We came back down into it and then got a little move away, and then the market went kapowie and just blew right through the damn thing. So now what will we be looking for? Well, now I feel like we're setting up for that price shape that I like to see, right? When I love to see my price shapes, gotta clear all this out. When I like to see certain price shapes, I like to see a move up and a pullback, right? Some sort of a move up and a pullback. And when I get some sort of a move up and a pullback, then I anticipate that the next leg is the one that would come down from here, right? And so with that next leg would be the next leg that would come down. Well, when I come back in and look at the Russell, that's exactly the price pattern that we're seeing here on the 1 hour chart, as we would anticipate price to roll over from here, especially with the weakness we're seeing in the other markets. The 4 hour trend on the Russell, if you take a look at it, you've got, let me throw the zigzag indicator on there, because that's what I like about the zigzag indicator. No, I don't want to delete it. Oh, I hate when I do that. The zigzag indicator does a really nice job of just smoothing out all my swing highs and swing lows. And I've got if I look at just the pure zigzag indicator, then I've got 2 consecutive lower swing lows, 2 consecutive lower swing highs. Technically, it's a downtrend. All right? And that's what's good about this, utilizing the zigzag, is because it eliminates the subjectivity. There is no subjectivity so long as you always use it the same way. All right. And then the Dow Jones. Somebody had asked about the Dow. Dennis, I have some daily demand on the ES. Oh, that's the Dow. Just below at 30,600. Daily demand on the Dow at 30,600. Yeah, I definitely see daily demand down there in the Dow at 30,600. Matter of fact, that's really the next stopping point we have on a potential breakdown, and we're sitting above a potential breakdown point in the Dow right now. So all of our markets are setting up for a potential move down. Last night, we said that because last night when we were looking at this, the market was up here. And we said that if we were going to go bullish, the Dow was the better one to break out above here because it was more bearish market. And we looked at this last night. Our bottom two, the Russell and the Dow, were giving me more bullish signals. The S&P and the NASDAQ were giving me more bearish signals. Now, when in doubt, who rules the family? Right? When in doubt, who rules the family? Mom. When in doubt, mom rules the family. Mom is the S&P 500, right? If we think about this as a family, mom is the S&P, Dow is dad. Mom rules the family, and when mom goes down, the whole place is going down, right? I don't know about y'all, but half my life is telling my kids to don't get mom angry because it's just going to make life harder for us, right? Well, when the S&P goes down, the whole market's going to follow through. All right, that would be our supply level if price comes back up into there, but I really like the potential for a breakdown below here based on our selling pressure we're getting in these overhead candles. All right, next. Actually, that's all of our equity markets. Absolutely, Larry. No question about it. Does all the heavy lifting. All right, let me share this one out here real quick, and I forgot to open up my trade updates a minute ago, so it's going to take me a minute to get this loaded. So bear with me for a moment. All right. All right, next, let's move over to our energies and metals. So we're looking at crude oil and gold. So first looking at crude oil. Crude oil, we're sitting above a potential breakdown point here at 58.73. In looking at it last night, my belief is that I think our setup on a 4-hour, still overall longer term, I'm bullish. But I wouldn't be surprised to see us break below this 58.73 area. We do have a little supply area up here on the hourly chart, wick over wick level, but that's already been tested once. So I'm looking at this as a potential breakdown below 58.73. In between the supply down here and the demand or the support down below us, I don't really have a whole lot to lean on. So I think that that's really our best area, and I don't know if we're going to get there today. We'll see what happens with our overall price movement. Looking at gold. So gold last night, we had talked about the fact that gold looked to be putting in a bit of a base. And that if we get basing right in front of this level, this could become a good breakout trade. I am fully on board right now for bullish movement in gold up to 1810. So if you want to get in, I think actually now's a decent entry coming off of this area of demand. Your stop goes below this pivot right here. Since we got the basing in front of here. Now, we did take a look at this as a potential 15-minute reversal trade on a second touch. This was our level on Friday. So Friday's level worked out really well. This one here, if you decided to give this one a go based upon what we talked about last night on a confirmation entry, 6 candles later, price had basically gone nowhere. So that should be enough to give us more confidence in the bullish move up. So I'm a big believer that this is a good opportunity for price to get long. If you want to place your stop just below here, you've got a fairly tight stop in that position and a target of 1810. I think that's a pretty good target for price to make it up to that region. Okay. Next, we were looking at nat gas. So nat gas we talked about last night. So those of you that were in the trade room last night, we talked about the fact that Knack asked, though it's not a traditional gap and go, I was okay setting up the gap and go primarily because we had a breakdown line as well. And the breakout did occur, and we have come all the way down to where our profit target was, which was 2.93. So that has already come down and hit target from last night's live trade room. If you guys were in the room with us, you were able to catch some of that move. Hopefully that one ran down for you. When I look a bit higher, let's go to the 15-minute and see if there's a supply level to lean on. There's a decent supply level up here if we retest that you might want to give that a try. But the gap and go from last night was really the best setup. Yeah, you know what, Dennis, that might impact the Dow a little bit on United grounding a couple of planes. We talked about that last night in the room. So, Larry, in the pre-recorded session starting in March, will you still be posting the toss links to the members area of the web? Yes, Larry, I do. I do still plan on doing that, and because I'm still going to look at these markets every day. So, yeah, Nat Gas is rolling over. It hasn't rolled over officially as of yet, and there's still volume in the other one. We looked at this one last night. Not a ton of volume. As it definitely, we see that there's the lower volume in here. And even if you took the new contract on the rollover, you still had the breakdown trade. So same shape, different price. All right, copper. So looking at copper, we did get a bit of a pullback last night in copper. It was funny because last night the exact when we were in class, actually we were in class, it was right here. It was on this upper wick. I said, the problem with this is that it's gone parabolic over the last few days, and it's way too easy to chase this trade and tempting to chase this trade. And here's what's going to happen. When you decide, okay, I'm going to chase it, and you buy right here, that's when it's going to sell off. Somebody bought right here, and that's when it started to sell off. Now, we've got a little demand area down here, but really the best way to trade this the whole way up has been with breakouts. There was a breakout here. There was a breakout here. So there have been breakout trade opportunities. Wait for those. Wait for those. Wait for basing to give you a breakout if we're not retesting any of these demand areas. The other than that is just don't fight it. If you don't have a great level to tell you when to get in, then don't take it. Now, this one came down to really close to a decent entry, really the open of last night, and it's starting to come back up. But I still have a demand area below it that's a higher probable level. All right, let me share this one out. Next, let's go take a look at ags, and I'm not going to spend hardly any time at all on this because there's really nothing to talk about. I'm going to move all these to the 4-hour just to show something. So when I look at each one of these, my 4-hour trend is pretty sideways except for bean oil. So in bean oil, I've got a clear upward trend. So that's the one that's most likely for me to get a decent trade out of on a pullback. Problem is when I go into here, I don't really have any great areas of demand to lean on. I'd say that this is my closest area of any quality, but I didn't get a super strong move away, right? My move away was meh at best. And so I'm gonna leave it in here, but I'm gonna make it a confirmation. Other than that, everything else is pretty much sideways this morning in these commodity markets. All right, and then currencies last night, there wasn't a whole lot in there either. Although bonds wound up being a nice breakdown trade from Friday. So those of you that got in the Friday breakdown trade, we did get a pretty nice move down from here. Price has sold off from there pretty hard. Where would our reversal be? Well, if price does come back up into this gap fill area, you may get an opportunity on the gap fill, as we're putting in a little bit of basing down here on the 4-hour, but I think this is just short covering rally. I will say this. We looked at this a few weeks ago. How many of you, leave it in the chat window below. Let me know. How many of you got short on our swing trade opportunity right here? Because that is the trade, right? The swing trade opportunity is the trade, and it's still running down, right? That's the better setup. Is that was that swing trade off of here? If you can hold for the bigger moves, that's always going to be the better opportunity, especially when you've got such limited risk like you had on that particular position. So we're coming back up. I've not been trading a lot of gap fill levels lately, so you can take the gap fill level if you're so inclined. It's not the best of levels. I'd actually rather prefer to go candle to candle when we get back into this gap fill, and it looks like we may get back into there here. Dennis, the move in copper and Lunder is fanning my inflation fears. It should, Dennis. But I think we're very due for inflation. Matter of fact, I think that we're overdue for inflation. Especially, you got to think about it. We've got a weakening dollar, and that weakening dollar is also gonna hurt with inflation. So the big move in copper Lunder is driven by all the pending commercial construction projects delayed due to pandemic, and now as work is starting to resume, I expect HG to keep climbing. Chuck, your thoughts? Yeah, I think that the fundamental reason behind copper and Lunder, that I would agree with that. I think that's a big key. The other side is interest rates are so dang low. Interest rates are so low that there's just a glutton of borrowing money. Now, the thing that we've learned, and I don't know if you guys remember this, the bill always comes due, right? And so here's the real question. Are interest rates low and people taking out loans that they can't afford to pay the bills on? That's the question, right? And so will that lead to a credit problem 18 months from now? I don't know that. I'm not going to speculate that. But the commodity markets are certainly telling us that's a potential story. All right. Looking at our Friday level from the euro. So this was our Friday level from the euro, this rally-based rally. This was a super clean level. We actually bounced off of that in the overnight, and we have rocketed up from that area. So if you were able to catch that one is still moving pretty nicely. We talked about that one. Yeah, it's a good point, Dennis. Once that moratorium on evictions goes away, which eventually it has to, right? Eventually, I guess it doesn't have to. I guess you could continue to forever allow it, but once that moratorium on evictions goes away and people start to, and I don't want to see anybody lose anything. I mean, it's a travesty, but hopefully there will be some sort of a plan to keep them in their homes. But that will also impact supply. I mean, in all parts of the country, we're seeing housing prices go right up because there is more demand than there is supply at this point. Looking at this area here for a potential breakout, that is in play. If we were to get basing there, we've got one touch. I don't have three touches at all, but if I get basing, it'll blow right through this little supply area. If I don't get basing, then this supply area here might hold. And that's a pattern that we see happens a lot. Without the basing, the supply area might hold and then drop us back into a little demand area in order to get long. All in all, my 4-hour trend is kind of in between. So not a whole lot of great levels, but this hourly level worked out really well. All right. Next, Canadian dollar. So the Canadian dollar, we had a potential kind of breakout area. We did get a little pop, and then basically it went nowhere before then selling off. Now I think your best area is this one down here, 788.24 by 787.67. That's a little rally-based rally above a pivot low. That's always one of my favorite price patterns. So let's see if price makes it back down to there. Aside from that, when I look at the 4-hour, my 4-hour is technically still up, but I think it's weakening just a little bit. So keep that in mind. Yeah, I think that was done all over the country, Dennis. I think a lot of cities did that. All right, and then last but not least is our second currency markets. No, so the New Zealand dollar finally broke out of that trend that we've been sitting in for months, and it poked above it once. I mean, we were looking at basically this line, and it poked above it once and then came back down. And now I feel like we've definitively come above it. On the daily chart, we've finally gotten above this area right here. So the fact that we finally poked above it now gives me more confidence in my demand areas below, and specifically this one here, this wick over wick level right there at 723 by 7223. So that little tiny level there, I think, is your best one. You do have an area here to pay attention to. In this one, we had a move up and then a drop and then a rally-based rally. So you do have this area here that's also very much in play, because it was a prior area of resistance right there from the breakout line. Great British Pound. Great British Pound actually, to me, is setting up for the better breakout trade above this region here. Even though we're kind of getting some selling pressure in here, the longer we stay up here, the better the breakout setup becomes. On a pullback, 15-minute, this is the best area right here, 3916 by 3907. Japanese yen. So our Japanese yen, I talked about the fact that I feel like this is just another short covering rally, like we had a couple of weeks ago. And I think that the yen on a weekly chart, longer term trend could be coming down into this region here. So if we come back down, it would have to get below this area. And until we can get below there, then I don't think we have much of a story. And then last, but certainly not least, is the Australian dollar, which also had a darn near parabolic move up. This is the one I was hoping on Friday would come back in and get retested. And, of course, it did not. And so we kept rolling straight up. You may get an opportunity here at a bit of a wick over wick area. There's a little bit of a wick over wick area in there, and it's an old area of resistance. But I still like the level that we've identified. I'll just be patient and wait for that one. When I look at this on the 4-hour, it's going up really hard. Now, all of this is going up because the last few days we've seen the dollar come back down. And so the fact that the dollar has come back down is really the weakness that we've seen in here. So let's see. I'm interested to see, and this is a line from a weekly chart, if I recall correctly. Yeah. So we bounced off of this demand area here on the weekly. If we're unable to hold that, where's our next area? Well, I think that if this area here is unable to hold, which it doesn't look like we're getting a strong bounce off of it, then you come down here to 86. And then you don't have another area until 81. I mean, so there's still room for the dollar to fall, which would be bullish on all those other currencies. So if you're looking for longer term opportunities, if we get below here, if we get below this area in the dollar, you could maybe start to look at some of those currencies as longer term bullish opportunities. And potentially even, going further out, you could even, I'm extrapolating here a bit, but you could even look at something like the FXE or the FXE being the ETF of the euro. Right? So something like the FXE, something like the FXA, which is the ETF of the Australian dollar. So there are ETFs that you can utilize for these longer term trends. If you don't want to trade the currency pair, maybe you want to take advantage of the weaker US dollar in your retirement account. You want to act as a hedge against inflation, utilize some of these ETFs in order to do that. So All right, everybody. Well, that's all I have for today. If you guys have any questions at all, anything that I can help with, please send me an email, chuck.fulkerson@tradersarmy.com. Do me a favor, if you've not already done it, hit the thumbs up button. I'd really appreciate it. Gives the algorithms the fact that people are paying attention and that they like me. They really, really like me. Not that I'm begging for friends, but I kind of am. I mean, that's kind of what I do. So hope you guys have a great day. I will see you tomorrow morning. Talk to you soon. Peace out.